8:42 here. Time to check in on your money. We got a real jittery stock market going into this morning after yesterday's private sector employment report was borderline shockingly low. Everybody's been sitting on pins and needles all night to see what goes on. I know you may not have been, but the guys that throw money around for a hobby definitely have. Let's find out what's going on this morning with Phillip Statler from Statler Financial Services, who is on the phone. Phillip, good morning. Good to hear your voice today.
Hey, good morning, Dave. Glad to be back in the office this morning. And yesterday, we shed some more points, and it looks like this morning we can't get to green this week at all. It doesn't look like. It's just one of those weeks.
Oh, yeah. Yesterday, like I said, we were jittery yesterday. We started out the morning with the lowest number of private sector jobs added since way back in 2021. The ADP people said the private sector only added 99,000 jobs, and they actually revised the prior month's sucky number downward even further. So it was not a good day, and the market responded with another 219 points down on the Dow. The S&P and the NASDAQ weren't quite as excited. The S&P was down by 16.5. NASDAQ actually eked out a 43-point gain, but given the amount they'd shed this week, that was almost a loss, as bad as the week has been so far. Which brings us up to this morning, and the big number that made everybody so jittery, the federal unemployment report, the quote-unquote official one. And we were expecting 163,000 new jobs to be created last month. We ended up only creating 142,000, which is an underachievement, but the official unemployment rate does manage to go down from 4.3% to 4.2%. I asked you right as we got on the phone because you've got the benefit of instant quotes as far as what's really happening at this exact moment in time, and you said we didn't really react as badly as I thought we would, did they?
No, we actually went the other direction. I mean, I thought we would go worse. It actually improved. I mean, it's still red, don't get me wrong, but it still improved. The red numbers put them in a little better position.
Yeah, it's got to be it's just got to be that bad news equals good news thing. I mean, we've got more likelihood now that the Federal Reserve will respond in the middle of September. I think the meeting ends on the 18th, so we got 2 weeks to put up with this jitteriness. Makes it a little bit more likely they might even drop interest rates by a half, and it's being backed up by a couple of people this morning. Goolsbee, the guy that runs the Chicago Fed, I think he's got a vote on the Open Market Committee. He's saying we need multiple rate cuts, and we need them starting right now. And then Market Watch is quoting a Nobel Prize economist, and he's saying we need big rate cuts now. Phrase I'm hearing is, yeah, it looks like we got a soft landing underway, but we're hearing more and more analysts saying the possibility that the current soft landing might just be a prelude to the proverbial landing gear buckling on the runway. One of my tip sheets is saying a recession is looking more likely now, and that sounds like an overreaction too, doesn't it?
It does. I think at this point, I think it's people, hitting the banner trying to get the Fed to lower interest rates maybe a little further than anybody anticipated. Hey, talking about jobs, though, the one thing I will say is that, yes, they were less than were anticipated, but there were significantly more non-farm payrolls created than the prior month. So that was kind of good news.
Yeah, because last month was absolutely stinko. It was only 114,000 last month.
Exactly. So I think if you take everything into consideration, that was an improvement, not as big of an improvement as the analysts had predicted, but still it was going in the right direction. And so I think that may be what's got the traders not abandoning the ship yet.
It's been I just had another one pop up. Another one of the Fed governors, Williams, now is saying that it's appropriate to cut interest rates right now. It's starting to become the Mormon Tabernacle Choir this morning as far as interest rate cuts, isn't it?
It is, and we'll see what They're not going to come out this close to the meeting and make a change. They're going to get to the meeting next week or the week after, and they'll sit down and hammer it out and come out with hopefully a unified front on here's the plan going forward.
Absolutely, and we got to keep in mind too, all of these statements by Fed governors, they go into shut the heck up mode starting next week. For 1 week before the meeting, the requirements are they can't talk about anything. So they're all putting out their press releases and statements while they've got a chance right now. But after this week's stock market performance and this week's numbers as far as the unemployment is concerned, it's starting to look like something needs to be done, and now the indications are I start getting concerned as to whether or not the Fed is going to go straight from fifth gear straight into reverse, and that's the kind of thing that makes the markets go crazy in the other direction.
It will. That will not be a good thing either. Hey, you may not have looked, we didn't talk about this, but what's your fear and greed index showing?
My fear and greed index went down from the high end of normal down to the low end of normal this morning on the report when I checked it. We're not into fear yet, but it is moving downward toward fear. And if we have one more day like we've had earlier this week, I wouldn't be surprised at all on Monday to be looking at solid fear.
Yeah, that's it just kind of threw me. I thought that'd be interesting to know that going into this weekend. So, yeah, it is. It's it's a mixed bag going in, but we do have a few companies have reported, and they're not doing bad. Broadcom, is another one of those companies that benefits from chip making and that kind of stuff. They've been a benefactor of the AI components and some of that stuff, and so they really had an okay quarter. They beat on revenue and they beat on earnings. However, they're getting clobbered this morning, Dave, because they projected their current quarter revenue to be $14 billion, which sounds like a nice, good number to me, but evidently everybody else expected them to say that it would be over 14 billion, at like 14.04 billion was expected. Well, that little 0.04 is really costing Broadcom this morning. They're down almost 6%.
Well, Broadcom makes the support chips that add on to NVIDIA's artificial intelligence-based chips. So they kind of tend to track each other. I was kind of wondering, as I saw the note come up on my ticker, that Broadcom had beat the street, but their stock was going down. I figured it had to be guidance down the line, because if NVIDIA goes soft, Broadcom goes soft almost by definition. Their primary business has been routers over the years, but now they're getting into the chip-making side, and they support a lot of the AI products. So if NVIDIA sells less, Broadcom sells less. It's one of those, one catches the flu, the other catches pneumonia.
Yeah. Yep. So that's true. They're all kind of tied together for sure.
Yep. Oh, absolutely. Other indications this morning.
Hey, we got a couple other companies that have reported, not necessarily household names. There's a company that it'd be interesting if they'd come this way called Bolero. Now, it's a bowling alley chain, Dave, and we could use one of those around here. So they had a good quarter. They beat on revenue. And so that was good. They kind of looked at their revenue for 2025, and they're now saying they should be on the high end of their expectation for next year. They're getting a nice bump this morning, up 11.3%.
Yeah, that's good to hear, because bowling as an activity has been kind of in decline nationally. I mean, the fact that we don't have one in town anymore, kind of indicates it. But even in hotbeds for bowling like Milwaukee, the alleys up there have been having traffic difficulties. Having one of the national chains saying good news, that's good to hear for the sport in general.
Yeah, it is. I got one more for you. It's a business company called Smartsheet. So they provide businesses with some ability to share information back and forth and to collaborate and that kind of stuff. And so they had a second quarter earnings of 44 cents, which was way better than the 29 cents that were expected. And revenue came in ahead of expectations as well. They're trading up this morning about 4.5%.
We'll take it happily. So resetting the table for the morning, yesterday was another modest off day on Wall Street on balance. Now we got the job report this morning, and the full picture, the employment numbers are in 45 minutes before we open. What are we looking at so far?
Hey, before I tell you that, I want to mention interest rates real quick, Dave, because we're seeing the 30-year Treasury below 4% for the first time, and I don't know when. It's ticked up a little bit. It's like 3.99 right now. It was down below that. So, but that's some good news for interest rates and mortgages.
Oh, yeah, kind of verifies, though, the notion that fear and greed index moving closer to fear because lower rates means they're buying more bonds.
Exactly. So the indexes, we've actually flipped to some green, Dave. The Dow is up $28, less than 0.1%. The S&P 500 is up $4, also less than 0.1%. The Nasdaq 100 is down $21, or about 0.1%. So that's where we're sitting on the index. On the commodity side of the front, we've got silver up a little over 0.6%, still below 30 though, at $29.28 an ounce. Gold's up a third at $2,552 an ounce. Crude oil is up 0.5%, Dave, but still below 70 at $69.53 a barrel.
Boy, when we dipped down below 60 before Sept, below 70 yesterday morning, I wanted to have a sip of champagne. It's just nice to see 6 as the first number on that, isn't it?
It is. Hopefully it'll stay down in that range.
Keep your fingers crossed. Looking at the overseas markets, Asian Pacific Rim markets pretty much all closed in the red at 6 a.m. this morning. On balance, I'd call it off by about 0.5%. European markets are looking at us and saying, are these guys ever going to go green again? Overall, European index is down by about 0.25% halfway through the European trading day this morning. Getting retirement plans together so I can afford to retire someday, that's going to take a fresh pair of eyes because, we all do our own planning with our heart, and it needs to be done with the head. How do I get a meeting with you to use your head and get my retirement back on track?
That's right, Dave. Emotions can play havoc when we're talking about investments in retirement. And that's why I created the Core Retirement Design, to help people design that retirement they always dreamed of. Give me a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And back again here on Monday morning with an update as to what went on over the weekend and is likely to affect your money here on Monday morning from Light. Thank you, my friend. I will see you then. Fair enough?
Fair enough, buddy. Have a great day.
Thank you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I hope you have had a great week. Have a great weekend. I look forward to speaking to you again next week. Until then, have a great one. Bye now.